April 2023. We have another market update for the Central Ohio real estate housing market. Danny's going to run through all the numbers with us, but the short answer to your question, how's the market? Rebound is continuing up in all, positive in all metrics that indicate a growing housing market. So Danny, let's take a look at these numbers here.
Okay, so the 30-year fixed mortgage rate it was up and down, right? If you look over the course of the last month, but what you'll notice is after that period of rising rates that really went on this graph from the far left in March of last year, up, then steady, and then up again to 7% as the high late last year. It's finally started to trail off from that, and we're really kind of up and down, kind of in this tight little window between 6% and let's just call it 6.5%, and that's been going on now for quite a many months. So I think people are starting to wrap their heads around what that actually means. They're pricing that into, their affordability calculations, and we're starting to see a little more, predictability. Even though maybe not everyone's happy with the rates, at least there's some sort of pseudo certainty about all of that. And I think we're kind of seeing that play out in some of the other metrics. So coming into the month, we were at 6.3-ish% for the 30-year fixed mortgage rate.
Yep, and I think that we'll continue to see that. We've kind of been saying that for the last few months, right, Danny, is that I know that we used to have 3% interest rates. I don't really expect to anytime soon. I think most people are getting on board with that idea, and that's causing stability more than anything else. So as long as the rate's staying relatively stable, we're going to continue to see activity pick up because people have other reasons to move. So next section here, home sold, that's definitely up.
Yeah, and again, I think similar to previous months, right? There's the macro, which is if you look at this March compared to last year in March, we're down, but we're only down 12%. But if you look month over month, it follows the normal seasonal patterns. You can see that this crested in the spring and summer months, down into the winter, and now coming out of the winter, we're rebounding very nicely. And you can see just from January, 1,200 and some homes sold up to 1,500 last month, and now over 1,900 in March. That's the sign of normalcy, right? I think in terms of the volume of houses and how that's been changing month over month as we get into the busy season, which we expect to be in spring and summer again.
Yeah, for sure. And that 1,900 number, I know it's off of our highs, but it wasn't off of 2 years ago. So if we compare this historically, we're still near the top of the market movement game. So we expect that to continue again. Columbus is a booming town. There's reasons to move other than interest rates. So it's a lot of factors that are coming into play here. And then next we have the over and under asking. This is something Danny's been tracking pretty well, which is again a very good indicator of a stronger market. Danny, what are you seeing here?
This has changed since last month, and really over the last couple of months. You see that, again, the blue section is really anything that really sold pretty close to asking. So we're looking at plus 5%, so 5% over or 5% under asking. Anything in the orange is 5% lower than the asking price, and anything in the green is 5% or more above asking. So those orange and green bands have really changed over the last couple of months. There was a lot more orange and a lot less green. And this month, things kind of ticked upwards in terms of the green category. So, and that was really a kind of a trade-off from the orange. So still the bulk of things are selling right around asking, but for the last couple of months, we didn't see as much going above, certainly not 5% above. I think, Rob, anecdotally, with some of the clients you've been working with that are buyers, you've started to see a little more competition, right, over the last couple of months, just in terms of some of the offers that you've made.
Yeah, for sure. There's a lot more competition. Basically, any house that seems worth its value, other people will think that too. You're going to get multiple offers. I'm seeing them every time now, multiple times. So buyers and sellers, we're having that situation. That never really stopped. So we're kind of expecting that the good houses, the houses that are obviously worth their value, people are still willing to pay more for. So that's going to continue. That's not a great place for buyers. Sweet spot for sellers, but you just have to know how to navigate that as a buyer. And it's doable. The next portion, the next chart that we're taking a look at here, average of original list price, right, Danny? This was one of those charts that converged one point on the way down when we were seeing our slowdown And now we're hitting a new convergence point, the opposite, on the way back up.
Exactly. And this is one where, there was a moment where we saw over the last few months that with the interest rate changes, especially over the amount that they changed so much over such a short period of time, it was very hard for people to adjust. Affordability was the big challenge with that. And that caused a lot of people to just quite frankly not be able to participate in the market. And it also caused a lot of people that were in houses at good rates. There's a thing called the lock-in effect, where they didn't really want to upgrade maybe to the next big thing. And that restricted the amount of supply coming into the market. So even though demand was down, supply was also down. So we looked at some different things to kind of say, is this a seller's market? Is it a buyer's market? If you look at things like, average days on market, we'll see that here in just a minute. But this chart is one as well. You see that the list price and where things actually sold, those crossed over, and you saw that all of a sudden you didn't have as much competition for a house, which meant you didn't have as many kind of like bidding up above asking. And you see that's where that orange line really started to go below the list price line. And now all of a sudden it's reversed. And this is now 3 months in a row that it's had a bit of it's had its bottom. And now there's 2 months in a row where it's been rebounding. And now we're coming in almost exactly at the list price. And I'd expect that in the coming months that, based on what you're hearing and seeing out there with your clients, that this is going to continue to go up. We're going to have more competition, which is probably going to drive, higher bids for houses to win them, right? So that's probably how it's going to look here. It's probably going to cross back over here in the next month or so.
Yeah, the cycle continues. Higher bids means higher end sales prices, right? Actual sales prices, which are higher comps, and then prices keep going up. So that's definitely going to happen. We're seeing that now. Another thing we're seeing is the average days of the market. The median days of the market, which we've decided is maybe a better metric to track, has dropped a lot, about 30%, 33% from last month. That's significant.
Yeah, no, I'm totally with you. And just to jump ahead to one last slide here, because I think it tells the same story, paints the same picture. You see the sales that came after a price reduction. That's hit a ceiling a few months ago, and now it's been dropping off. And again, I think what this means is there was this brief moment where all of a sudden it wasn't so much a seller's market anymore. It was probably a buyer's market to some degree, where there was not as much competition. People were accepting offers that were lower because they didn't have 5 or 10 offers for their house. And now I think some of that is starting to turn back around in favor of the seller. And that's kind of played out in these charts where things are going quickly. You don't need to have a price reduction as often. And you're starting to get a final sales price that's close to almost exactly what you listed at, all in all for the market. So I guess we're probably still balanced, but in terms of, kind of the saturation rate or the absorption rate, the months of inventory is still very low. So there were 1,900 plus homes that were sold last month. There's something like just under 1,500 that are even active today. So that's less than 1 month's supply, which is a sign that it's a seller's market.
Yeah, that's a tough thing. So one of the things that the numbers are showing is more balanced market leaning towards sellers. I'm going to go ahead and tell you, anecdotally, it's definitely a seller's market right now. So keep that in mind. We need more inventory. You will get higher prices, and you will have an easier time with things. People are waiving. One of the reasons some of my buyers are getting beat is because they're not willing to forego the inspection, which I think is an important thing to do, especially on older houses that are wavy. In one specific example, someone decided not to do that. So I don't think that's the best move, but they did get the house, and I hope it all works out for them. Definitely a seller's market. Sellers getting out of there clean. Yeah, we need more inventory, and prices are continuing to rise. So if you were on the fence before, consider jumping in the game now.
Absolutely. Yeah. So I guess as we look forward, the advice for people that are buying is what? Be prepared for competition over the houses that you're looking at. The things that are upgraded and move-in ready, those are probably going to continue to get multiple offers. You're probably going to end up going above asking, making some of those tough decisions that you talked about in terms of what do we do about inspections, Maybe we don't waive them entirely. Maybe we have an inspection, but we reserve the right to walk away. Those types of things. Is that basically what you're seeing in terms of the outlook for buyers at this point?
Yeah, we need all of those factors now. Cash above offering price to cover appraisal. Gap coverage is what we call that. Waiving of inspections, waiving of repairs and remedies, extra time in the house for the seller. Just we have a lot of factors in play, and we need to bring them all now. So we're in the hot market again. It is a seller's market, like we're saying. We'll continue to monitor it. Hopefully, we keep this number ticking up. 1,915. Is that right? If we keep going up, we should be in better shape. But remember, if we're showing as down in anybody's metrics, it's off of our highs, not off of our average. So we're in a pretty busy market. So keep it going. I mentioned this because there's a lot of doom and gloom talk out there with interest rates up. It hasn't affected us that much. So just be aware of that. Yeah, we'll continue to monitor. If we have anything pressing in between, we'll reach out and give updates. And obviously, if anybody has questions, they can reach out to us.